Hey everyone, welcome back to Realty by Enrique Torres. I'm a local licensed real estate agent working with Christie's International Real Estate based out of sunny Coronado Hills, California. My mission is to simplify real estate to show you that buying a home and building wealth isn't just for the lucky few. It's for you too. But before we get into today's topic, how to qualify for a home, even if you think you can't, let's do a quick. One of my favorite segments is the market snapshot. Right now, the average 3-year fixed rate is around 6.35%, holding steady after a recent tick up uptake. Pending home sales right now are 4%, last month, showing a steady buyer activity and even with higher interest rates. Builders are still offering closing cost incentives and rate buy downs to attract new buyers, and overall the market remains healthy, which means opportunity is out there, guys, and you just got to know where to find it and how to be ready for it because it's very important that you get yourself ready so that when the opportunity does rise up, you're ready to take action on it. So without, let's get into today's topic is how to qualify for a home even though you think you can't. The truth about qualifying for a home is many people think you can't qualify to buy a home because credit, income, debt. But what if I told you that many times my clients think that they can't qualify, and then we sit down with them, we run the numbers, and it turns out that they're very close, or they're right there and they actually can achieve that home ownership. Um, so right now, I want to talk about a few myths that are going around right now. The most common myths about home qualifications, right, guys? It's myth number one is I need 20% down. You do not need 20% down to buy a home, guys. There's a 3% conventional loan. There's 3.5% FHA loan, which are both government backed loans. Um, even with that, if you're a veteran or an active duty member, you can do 0% down, right? It's called the VA loan, and they help you qualify for 0% down, you guys. And if you're using ITIN, I have lenders that can help you qualify for up to as low as 10% down. So there's all these type of things that can really help you to qualify you for a home. Two, my credit isn't good enough, guys. FHA loans accept credit scores of 580. Okay, so we just need a 580 credit score, and then we can help you guys qualify for that. There's also sometimes even lower with compensating factors, right? Plus, there are rapid rescore programs that we can help you get in and out of fixing your credit score, right? Credit repair is something that people are very scared of, but there's no need to be scared of of credit repairs because it's out there and it's achievable. I've helped tons of my clients that think that their credit score is too bad enough, but they make the right amount of money, and we need to fix their credit score, and it takes about we can be in as far as 2 weeks, guys, that you can get your credit score fixed. Number three is I don't make enough money, guys. There's tons of down payment assistance, lender credits, local grants, buyer incentives, seller credits that help you buy down your rate, or they help you for your closing costs, right, guys? And that helps make your income stretch a little bit further, and we get you right in that budget that you feel comfortable with having a monthly mortgage, guys. Um, Three, there's programs that a lot of people do not know about, and here are a few powerful loans that can help you get into a home. One of them is the CalHFA down payment assistance program, guys. If you go to my Instagram page, in my bio, I have a whole database. You go, you fill out all your information, and it gives you every single down payment assistance program that you can ever possibly think of. So use that tool. Even if you're not in California, guys, please use that tool. There's also a VOE program, which is a loan program that is done through your employer, where they do a verification of employment. For my business owners out there, if your business has been operating for 2 years, you can do something called a P&L, a profit and loss, and they don't check taxes. It's saying you don't go full doc, right? That's the term that we use. That's the real estate term is we don't use full docs. We use the profit and loss that is prepared by a CPA. You will have to go get your letter from the CPA, but we'll help you with that, right? And your CPA, your tax preparer should be able to help you do that, and it's a licensed CPA, okay? There's ITIN loan programs for individuals without Social Security, but with stable income. There's options for you. Teachers, nurses, public community workers. There's programs for you that are specified just for the people that serve our community. There's home ready and home possible loans, right? Flexible local limits and reduce mortgage insurance, right? So all that stuff can help you really get into that budget. Again, it's all about finding that budget and what's comfortable for you guys. And then a lot of big ones is seller credits, right? Builder incentives. These can often cover closing costs, or you can choose to buy it on your rate, depending on what makes sense for you at that moment. Uh, Here's one of my a real life story. Like I said, I show with you guys the good, the bad, and the ugly. And we had one of my clients. She was a single mom. She had two little babies, and she never thought she would qualify. Right? She calls me. She's like, Enrique, my credit score is at 680. I don't know what to do. I'm sorry, my credit score was at 600. I don't know what to do. I really want to buy a home. Can you sit down with me and can we figure out what it's gonna take? And so what we did was we created a 90-day plan for her, and then in those 90 days she went and she budgeted. She did everything that we had told her, that we had mentioned, and she eventually cleaned up her credit. And now we were in a little higher credit score. Which what it means is the higher credit score, guys, is that means you get a little bit more comfortable interest rate, and you get the best interest rate that are possible for that time, for that market, right, guys? And then again, you can always use seller credits, lender credits, grants, local grants that help you, that you can use to buy down your rate. And some of that you don't even ever have to pay back, you guys. There's programs out there that you don't even have to pay back. That money is yours. Um, we ended up finding her a nice little apartment condo in North Hollywood. She pays about $3,800, and that was in 2024 when the interest rates were even a little bit higher. You guys, people were still buying homes with an 8.75% interest rate, and now those clients that have spent the time and put in a little bit of that time and equity are now reaping the rewards because they have positive equity, right? Like I said, homes grow at 3.5% to 4% each year in California if you live in a good area, guys. Um, and so another thing that I want to talk to you guys about is the wealthy mindset shift, right? Wealthy buyers don't think about, can I afford this right now? They think, and they ask themselves, how can I position myself to be able to afford something? How can I make this start working for myself, right? And that's a huge difference. They take small steps, build credit, build savings, and get pre-approved. All that, and it takes a little bit of time. But remember, you surround yourself with a good team, you guys, a good lender, a good real estate agent, a good tax preparer, and of course you guys, right? You guys have to want that mind shift. The truth, people, is that most people get disqualified because they don't even try. You guys, they think that because what you've seen on social media and what you hear here and there, it's all about trying, you guys, trying. And if, like I said, you're not ready, let's build that 90-day plan. Let's have your lender sit down with you and run the numbers, because let the professionals tell you. Don't disqualify yourself because you think you can't afford it. Um, and if you want to buy a home, I have these are my 5 action steps that I would do right now. If you want to become a homeowner, here's what I'd start doing today. One, let's get into it. Talk to a qualified loan officer, right? Find out where you are standing right now, because you probably are closer than you think, right? Two, ask about these programs. Ask about FHA. Ask about the VOEs. Ask about the PNLs for my business owners out there. There's first time buyer programs everywhere. There's local grants. There's down payment assistance. Use those tools. Start building your credit, right? There's something called, you can go get a secured credit card that actually the bank gives it to you. You put in your own money. It's like a debit card, and once you swipe that, that starts building your credit. And you don't have to be scared of the big credit cards where the with the huge APYs, right? And the RPRs, all that stuff. So you can really help yourself by taking those small steps and asking, right? It's so important to ask questions, ask questions, ask questions, ask questions. Don't self disqualify your guys' self, guys. That's a big thing that I hear all the time. With all my clients, they say that they think that they're not ready, but you have to go and check it out, because you might be closer than you think, you guys. I'm telling you, I'm telling you, I'm telling you. You don't need to be perfect to qualify. You just need to start. The journey to homeownership begins with a conversation, and making that extra step, right? And once you take those first steps, you'll never look back. I promise you, you guys. And like I said, thank you for coming back and watching another episode of Realty by Enrique Torres. Please comment below. Please ask questions. We're gonna do Q&As later on in the podcast seasons. And if you like to be in the know, and you want to be part of the family, go ahead and follow and like and smash that like button. It's been your friendly neighborhood realtor, and I'll see you guys on the next one. Bye.